All right, good morning. This is the 9th of April and we're standing right outside the RBI because just in a few hours, the Reserve Bank of India governor will announce the Monetary Policy Committee's outcome on what they intend to do with the repo rate in this April meet. Now, remember that this is the first meeting for this financial year. This is also the RBI Governor Sanjay Malhotra's second Monetary Policy Committee meeting, and it's coming amidst a lot of uncertainty in the global economic scenario. So let's get a few facts out first. First and foremost, most economists are expecting a 25 basis point rate cut by the Monetary Policy Committee in this monetary policy announcement today. Essentially, the repo rate will come down from 6.25% to 6%. This is coming at a time when domestically the liquidity scenario is looking quite healthy. After a long period of liquidity deficit, we are finally at a 1 to 2% sort of a surplus on the liquidity, and that's why this is an important sort of a time for the RBI. As far as global macroeconomic scenario is concerned, we know that last week the US President Donald Trump announced unequivocal tariffs across the world, across many countries. India is, of course, no exception. The US has levied a reciprocal tariff of 26% on trade with India. So essentially anything that is exported from India to the US will be levied with that 26% tariff. Currently, of course, India is negotiating better deals with the US through a bilateral trade agreement. Some other countries have, of course, taken a retaliatory pose against the United States, especially China. Last evening, we saw that the US said that they will now implement a 104% tariff on Chinese exports to the US, which has thrown the global markets into a tizzy. We saw the US stock markets end at a quite a bad number, and now, of course, it's all up to Sanjay Malhotra to deliver that rate cut, because Indian exporters will need that support. But alongside that, there are fears that globally inflation will get stoked because of this tariff measure that has been announced by the US. Right now, it is likely that the RBI and the MPC will weigh growth over inflation, at least for the temporary time being. What is also interesting to note is that there is an accommodative stance which is likely to come in during this monetary policy. We do not know if the RBI or the MPC is actually going to change their stance from neutral to accommodative, but there is a high possibility that's what the market is expecting. The market is also seeking a CRR cut, a cash reserve ratio cut. Currently, cash reserve ratio is about 4%. This is money that banks have to place with the RBI at zero interest. So if the RBI does end up cutting the CRR, then that will be a further liquidity boost. It will help with transmission of the rate cuts. It will also help in giving some confidence to the market that the RBI and the government is firmly behind providing whatever financial support that is needed for the system.